Ladies and gentlemen, in less than 48 hours, everything changes. Because what you have to know right now, before it's too late, is things are starting to break in the financial system, but much of the public is not aware of what's going on. The US stock market is in its worst bubble in history, and many people are now starting to alarm to say how much irrational exuberance is out there in the market, how much valuations are getting away from fundamentals, and now we're seeing different parts of the financial system begin to break. So everyone, you need to pay attention right now to this video. I'm going to reveal to you exactly what is happening, how bad this bubble is, what's actually going to pop this bubble, and how we can protect ourselves and how we can profit from this situation. So everyone, this is going to be a very, very important video. So let's not waste any time. Let's get straight into the news, the facts, and the data. Well, okay everyone, first things first, to set the tone of today's video, listen to this. The stock market is at the same valuation as when Greenspan made his irrational exuberance comment. That's Alan Greenspan, that is, who was the head of the Federal Reserve when the stock market was in a huge bubble and then proceeded to crash. And again, in this video, I'm going to reveal to you the exact indicators that prove we're in a much worse situation now. Because look at this, the greatest bubble in human history is close to bursting, according to this black swan investor that predicted the crash in 2000 and 2008. But it's not just him warning us. We're going to go into this next report that shows us, and I've got much more data on not just calling out a bubble, because it's easy to say, look, we're in a bubble, the stock market's overvalued. Many people said that before, but it's much harder to say, well, put your money where your mouth is and tell me exactly how this bubble is going to burst. And again, people, in this video, I'll reveal to you exactly how it's going to happen. One of the biggest risks I see developing right now is at some point next year, investors will balk and demand higher interest rates or a demonstration of fiscal discipline. We see, I'll bring up now, how much debt the US government is in. We see, I'll bring up this next article here before I finish on this point, Britain bond turmoil invokes memory of 1976 debt crisis. There is soaring yields and is prompting comparisons to what happened with the trust debacle. But the economy's woes may be similar to the IMF bailout era. So this is just one example of many countries facing a debt crisis. We're seeing this in Australia with so much debt. We're seeing the Aussie dollar plummet to 60 cents. The Chinese yuan is crashing, and much, much more. And why is this happening? It's because governments have been playing kick the can down the road game. But eventually the road ends and they have to face the music. And eventually the people lending out the debt will start to lose confidence in your ability to repay that debt, or they're going to start demanding a higher interest rate for the increased risk that you'll not be able to pay it back. And we're starting to see yields now, not just in the UK, but the US, start to skyrocket. Now, this will be triggered by an even larger deficit or an even bigger auction of treasuries. Those demands will wean the US off its dependence on government spending, at least temporarily, and in turn undermine economic growth and corporate profits. So that's exactly right. What does this system rely on to grow? It's not fundamentals, it relies on money printing, and it relies on debt for the economy to grow. But as you do more and more money printing, it takes more and more money to get the same amount of GDP growth. For example, when they bailed out the banks in 2008, they did about $750 billion. But now when they have to bail out banks, or what they did in 2020, they printed trillions and trillions of dollars. And over the next crisis, they'll either have to let the markets fall and rebuild from a more sustainable basis, or have to print hundreds of trillions of dollars, and then we'll see fiat currency become worthless, like's already beginning to happen now in many countries. Because look at these next indicators that are flashing red. So this is the yield curve, and it is now uninverted. Now this is a very, very bad economic sign. Now when did this last happen? 1990, 2000, 2008, and 2020. All when we had huge economic downturns. Another big economic indicator. Warning, temporary help requirement is declining. Now this normally happens before big economic downturns, so it's time to buckle up, everyone. Now I know what you may be thinking, well look, this is never going to happen. They'll just keep bailing out the markets. They've gone up 20% plus each year, and this is exactly what's in the market, irrational exuberance. And you know, the same thing happened before 1929. Before the Great Depression, it wasn't slow economic growth. They had a huge boom. They had the roaring 20s when people would say, Stocks only go up. The stock market can never go down. And it's only once everybody is in the market and there's no more money to lift up the market or keep the market growing, that when they pull the rug or there's a huge black swan event, there's simply no money to save the system from falling. But guess what, people? That's not the worst of it. I've got even more alarming indicators to show you, and even the Federal Reserve themselves saying that, hey, things are about to get much, much worse. Because look at this, Fed officials are worried about the inflation impacts from Trump policies, minutes show. Well, what about their policies? They're using this as a cover up. Now, make no mistake, if there is massive tariffs put on these countries and these products, of course they're going to go up in value. Of course it's going to lead to inflation. It doesn't take an economics degree to figure that out. Because these companies, do you think they're just going to cop that price increase? Do you think they're just going to absorb that tariff? No, they're going to pass it on to you, the consumer, and prices will go up. But this is a scapegoat for the Fed because the Federal Reserve cut interest rates too quick, and now inflation is starting to surge again, and they've let the markets believe that they'll drop interest rates to zero and told the markets, look, we've won inflation, we've declared victory on inflation, there's not going to be any more inflation. And they've created this huge bubble, and now they realize it. So listen to this. Federal officials at the December meeting expressed concern about inflation and the impact that President-elect Donald Trump's policies could have on efforts to reduce it. The policymakers said they will move more slowly on interest rate cuts due to uncertainty, minutes of the meeting showed on Wednesday. So this is a huge red flag for the markets, and we're starting to see bond yields spike, and we're starting to see the dollar surge, and again, other currencies around the world are tanking at very alarming speeds. Now look at this next report that shows Donald Trump knows that a Great Depression is coming. He even put out that social, they don't call it tweets on his True Social account, but on his social platform, he put out that says the Democrats, what they've led to him is going to lead to a Great Depression. And he may have no choice but to bring the country into a depression to fix all its issues if they want to, rebuild from a more sustainable base. But he may play the same game that other politicians have played by trying to kick the can down the road. But look at this. Trump could declare national economic emergency to justify universal tariffs. But I think he knows there's going to be much more problems coming his way. Because look at this. The jobs market is starting to shift. And we've gone from, not having enough people to fill these jobs to too much jobs, the economy weakening, or them trying to get cheaper labor from overseas. So look at this. Over 100,000 workers were laid off from tech jobs this year. And here's where they went. Well, I think we all saw what Elon Musk wants to do, what Vivek Ramaswamy wants to do. They want to lay off all these high-paid US workers and import cheap foreign labor. But again, if people aren't getting paid enough to cover the cost of rent, to cover the cost of groceries and have disposable income, they're not going to be able to spend on products of these companies that they're working for. And if companies' revenues fall, then that means their price to earnings ratio will go up, and this market has to correct. Because look at this chart. This is the S&P 500 price to earnings ratio. How expensive the stocks compared to how much they're earning. Now, throughout history, the median has been 15. And do you know where we are right now, people? 30. Double the median. And every single time we've crossed 30, we've seen a massive pullback and correction in the stock market. Now, do you want even more proof that the economy is not doing good? Look at this next report here, everyone. Microsoft confirms performance-based job cuts across departments. And this is going to lead to even more layoffs than this. First, they're going to start with performance-based job cuts, but then they're going to start to cut even entire departments as their revenue starts to fall. But okay, everyone, what's the biggest risk for the stock market of them all, which will lead to a Great Depression? Well, in my opinion, I think the biggest risk for the stock market and the US economy right now is the bond market. We're starting to see the Federal Reserve has tried to cut interest rates, but the reverse effect has happened. The 10-year US Treasury has started to surge. Now, why is that? It's because the US government is on a huge unsustainable spending spree. The creditors are starting to lose faith in the US government's ability to repay, and they're now starting to demand a huge premium. But here's the thing. If you could get a 7% return on a US government bond, again, there's no such thing as a risk-free investment, but it is very low risk. Why would you risk putting your money in the biggest stock market bubble of history? Well, simply you wouldn't. And that's what I think is about to start to take effect very, very soon. Because look at this report here. Global bond sell-off leaves US Treasury yields flirting with 5%. And the 20-year US Treasury crossed the threshold last seen in 2023 when we did see that big sell-off. Now, inflationary worries and the fiscal trajectory rattles markets. And this is what I showed you in this report. We're going to see a Great Britain debt crisis like 1976. We're going to see currencies around the world begin to plummet, and we're going to see a big debt crisis. Now, I know what you're thinking. That sounds very, very scary. So what you next need to know is, how can you protect your wealth? Or how can you even profit from this crisis? Because during these crises are when some of the biggest fortunes are made. Well, let's look at what the best investor throughout history is doing right now. Well, look at this, everyone. Warren Buffett is sitting on a record cash pile of $325 billion. So he's very patient. He knows big buying opportunities are coming, and this is what you should be doing. Create a war chest right now, so when the stock market does crash, you can pile in and buy for pennies on the dollar. Meanwhile, everyone else will be laid off. They'll have no cash to buy stocks when they're so cheap, but you will. Now, in the meantime, while you wait for markets to crash, there is also another strategy. This is what I like to call the Trinity portfolio. That is gold, silver, and Bitcoin. Because look at this next report. Debasement trade into Bitcoin and gold is here to stay, JP Morgan says. Now, you may say, well, why should you do this? Stocks is the best investment throughout history. Well, do you know the S&P 500 went up about 25% over the past 12 months? But do you know how much Bitcoin and gold has gone up? Well, gold and silver is up around 30% over the past 12 months, and Bitcoin is up a massive 120%, hugely outperforming the S&P 500. Now, why I like this investment strategy is because if we do see a debt crisis and currencies begin to fall, like the Aussie dollar, gold's up nearly 40%. When you look at Aussie dollar terms, it's up way more for Bitcoin in Aussie dollar terms. Well, that gold, that silver is a safe haven investment. But if the opposite happens, if for whatever reason the market remains irrational longer than you can remain solvent, that is a very famous quote because it's true. We don't know how long exactly this bubble could go on for. If you have Bitcoin in your portfolio, if we do continue to see markets go parabolic, well, in my opinion, I think Bitcoin will continue to outperform the S&P 500 massively like we've seen over the past 10 years. So you have potential for the upside, and you also have a hedge, a safe haven in case the worst case scenario plays out. So everyone, make no mistake, this is a very, very serious warning you need to take very seriously and start getting your house in order. But everyone, what do you think about this? Let me know down below. Thanks for watching. You're awesome. I'll see you all in the next video.